Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Kelvin, great to have you on the show again. Thanks for coming in.
Sure. Good to see you again, Brian.
Now, Kelvin, before we get your insights, I want to take a quick look at how the crypto markets are performing first. Bitcoin is at 39,395.9. It's up 3.46%. Ethereum, however, is up more sharply. It's at 2,695. It's up 7.31%. So it's really had a run up because if you remember, just a few days ago, Ethereum was only at around 1,900 plus. Now, across regional markets, you will see that the SGX is at 3,176.67. It's down 0.2%. Bursa Malaysia is at 1,492.7. It's up 0.09%. The Nikkei is at 27,700. It's up 0.42%. Shanghai Composite is at 3,480.39. It's up 0.09%. The Hang Seng is at 26,374.56. It's down 0.2%. Rounding up all the markets, we've got the ASX 200, which is at 7,516.6. It's up 0.18%. Kelvin, what's your view on the market performance across the region?
Okay, so what we could see right now, right, it's a very mixed bag performance, I would say. Neither strong or neither very weak. So one of the reasons I would say that market seems to be in a waiting mode from a very short-term perspective. Why? Because of the upcoming US key economic data, which is up on Friday. All right, so
that's the non-farm payrolls.
Yes, the non-farm payrolls. And also, if you were to take a look at this situation right now, right, if you look at the last few key economic data globally or from a global perspective, like the China manufacturing PMI data, as well as the non-manufacturing PMI, the state one, released earlier part of on the weekend. So it actually indicate a bit of softness in terms of manufacturing activities and non-manufacturing activities in China. All right, and also to top up that up, right, recently the ISM manufacturing service data, ISM manufacturing for US also shows a bit of sluggishness in the month of July. So all this right actually add up to this kind of peak growth narrative. Where what is this peak growth? So basically we're talking about that V-shaped spurt that we actually occurred late last year after the massive fiscal stimulus that's being pumped in by global governments, has now starts to temper out. That means going forward, right, stock prices, because stock prices tend to be forward-looking, they found it very hard to find the next catalyst to push stock prices higher at this level. So everybody is a bit of concern about this situation right now. And also on top of that, right, what if the US central bank, the Fed, starts to temper its QE? So that's why market actually is waiting for this non-farm payroll data to give a clue as a kind of head start that what is the possibility of US central bank, the Fed, tempering its QE this year, which is 2021. So in fact, yesterday there's this Fed chair, not the chair, the vice chair, actually hinted that he's actually in favor of tempering this year because he's pretty confident about robustness in terms of the US job market, despite this ongoing new spike in this COVID-19 spread through via this Delta variant that we start to see in a couple of weeks.
Now, on the subject of tapering, essentially one of the clues in terms of other markets besides the US, the smaller markets like New Zealand, for example, they have basically already, the market expectation is they will already start to raise rates in the coming year, in fact, more than once. Later today, we've got the Bank of England policy meeting as well. What are you looking for and how do you expect FX markets to be impacted?
Okay, so for the Bank of England, right, what I am looking at, right, is, okay, because right now, market has really penned in rates no change, it remains very low at 0.1%. And what's interesting over here is the forward guidance that when do they want to temper their QE. So for now, right, since the last two meetings, the BOE has been pretty much dovish, saying that, hey, we are not going to temper this QE and interest rate very soon. Why? Because they still believe that the current inflationary pressure in UK is temporary. So they're just singing to the tune of the US Federal Reserve. But what I want to highlight over here is that there's a possibility that they might change their forward guidance. So what's the forward guidance they're looking out is that okay, because that's a bit different now from the Fed is that in order for them to temper their QE, their key policy interest rate need to go up first to 1.5%. So currently it's at 0.1%, which is the margin is very, very low. So what it means, translate over here is that what if suddenly inflation were to spike up beyond their expectation? That means they got to actually hike rates very, very fast before they start to actually temper. So what they're going to do now is they might use another avenue to actually kind of temper off inflationary expectation is by lowering down the threshold to actually start bond buying, tempering of their current bond buying. So right now the key policy interest rate is 1.5%. They might lower the benchmark to maybe 1%. So
Okay.
if that is possible, what it means over here is that in the longer term perspective, that means the yield curve actually will start to actually rise on the longer end because of the potential lack of the potential more supply coming into the market at the longer tenure yield. Because going forward, right, BOE might start to use tempering as a means to actually guide inflation expectation lower, whilst the shorter end of the curve was remains static for now. If they actually provide such forward guidance policy in this upcoming meeting. So if that were to happen, right, with potentially what you call it, the higher end yield curve of the UK yields going up from here, from this scenario, we may start to see what you call potential increase in the sterling versus the dollar, that means the pound. So what I could see now, the pound, right, is actually pretty much resilient in terms of in the last few sessions, the last 1 week, it's actually been held by this 20-day moving average at around 1.38, 38 figure level.
Okay.
So that could actually provide a kind of a good near-term support for the British pound against the dollar as we head into the BOE meeting later this evening.
So, Kelvin, last question. This week, the big data point that everyone is looking for is the non-farm payroll number. What are
Yes.
market expectations for the number coming in, especially because the ADP private payroll survey showed a gain of just 330,000 jobs in July. That was about almost half of what the consensus estimate was at 653.
Sure.
So is the market then expectations being tapered by or tempered by basically those numbers that are already out?
Because the good point to highlight is the very, very weak ADP number in terms of actual versus the consensus that was out yesterday.
Yep.
So, but if you look at the ADP number, right, the correlation, right, in the last 3 months with the official non-farm payroll number is not actually correlating very well. Because in fact, if you look at the last 3 months, right, since May, ADP number has been coming down pretty significantly. Whereas if you look at the non-farm payroll data, the US non-payroll data, it has been going in the opposite direction. It's been going up steadily. So it seems to me that there's not a kind of a perfect correlation with that. So, but so this time around, right, I believe that consensus still remains the same. So what they're actually expecting for this coming Friday for the non-farm payrolls number is to see a slight increase of 870K from previous month, June, of 850K. But nevertheless, if we start to drop below 870K, that means numbers came in below expectation.
Right.
I expect what we could see over here, number one, is we will start to see a bit of dollar strength coming into the picture, given that dollar has been holding on pretty key support level in the last few sessions, in the last 1 week or so. And for the US stock market, it will be a bit mixed. So I do expect cyclicals to actually underperform. That what we see yesterday's session, where actually the energy, the industrials kind of lackluster. But however, the one that is holding the fort will be the technology stocks itself. Because why? Because if all this actually based on the yield, the US Treasury yield. So with the weaker US job number, definitely we see the US Treasury 10-year to come under pressure on the downside again. So that could actually benefit tech stocks, but actually do not benefit cyclical stocks as per se, as a whole. Yeah.
Kelvin, once again, thank you very much for coming on the show, and thanks for your insights.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.